What's up guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update, and then we're also going to do a couple of comparisons between 2008 and 2022 and see if we could correlate something between the two. I'm going to go ahead and give you some clips of exactly the panic that they had from back in the day versus the panic that they have now, and try to make sense of exactly what's going on, because I'm going to explain what a recession is, because it seems like nobody knows a recession. Even our government doesn't know what a recession is, because they seem to be wanting to change their mind on a lot of things. Number two is going to be, well, how is this going to affect us as a whole? And where are we going to go ahead and proceed, and how much more interest rates going to go up? Now, the interest rates on the Fed side does not directly correlate. For instance, this is mainly a real estate channel. I'm a real estate broker here in the state of California. That's what I do. That's my bread and butter. That's everything in the kit and caboodle. But how does this go ahead and translate into what's going to happen into the mortgage world, into the world of you buying a home, and how is that cost going to affect you? Well, let's get on with the mortgage rate update. It's going to be 10 total products, and of course it went down again. This is why I say it doesn't always correlate with one another, because the Fed rate is the amount of money that is going to be translated in how much banks are going to charge one another, from a central bank to a depository to us brokers. How much is it going to charge you to go ahead and transfer that money? And then from there, then that goes ahead, and then after the fees and everything that we go ahead and do for operating costs, that's where you get the total fees right now. Now, we are going to have 3 more interest rate hikes, so go ahead and like, subscribe, and all that other good stuff. Comment, and then you could go ahead and stay up to date when we're going to get hit with another Fed rate hike. But the 10 mortgage products, as of right now, we're going to be sitting at a 30-year fix as of 7/29/2002. 30-year fix will be sitting at 4.29%. 15-year fix will be sitting at 3.50%. 30-year jumbo will be sitting at 4.70%. DSCR loan, which is a debt service covered ratio loan. This is for investor loans. If you're getting into the rental side of things, that'll be sitting at 7.70%. Bank statement loan will be sitting at 7.1%. FHA 30-year will be sitting at 3.60%. 7/6 adjustable rate mortgage will be sitting at 4.31%. USDA 30-year fix will be sitting at 3.64%. VA 30-year fix will be sitting at 3.89%, and hard money fix and flips will be sitting at 8.90%. So now, just for fun, I want to go ahead and show a little bit of a clip of exactly the market crash in 2008. So check this out. Hey guys, shameless plug here. For up to 50% commission rebate, 0% listing on selling your current home, or any mortgage assistance, link in the description below. Let me help you out. At least let me try to attempt you to beat your big bank on any rate that they have, because that's what we're here to do. So now that I got that shameless plug out of the way, let's get back to the video.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
2-year note yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just, every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on
on in the day is down by nearly 11%.
This market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast, so
seconds ago until the start of trading at the New York Stock Exchange, and stocks are set to kick off.
Now, of course, that was just pandemonium. Everybody was losing their mind. Now, I'm going to go ahead and compare that to exactly what is going on currently, 2022. So let's go ahead and take a look at that.
Ethereum even worse, down 17% today, down 75% from the highs, and the ProShares Bitcoin ETF down 18%.
So are Americans prepared for a severe recession? That sounds like a crap sandwich. And is there anything our bumbling government can do to fight back at this point? Joining me now to discuss the
below 20,000, the cryptocurrency is about to close out its worst quarter since 2011. And according
The market has taken a major turn, like everything else.
What we just witnessed today was brutal.
Obviously brutal. I mean, the markets rushed toward a place.
Right about this market, forecasting a heavy sell-off in the first quarter.
It's going to be all right, Tom. And then the market doesn't do what you say it's going to do. I mean, I don't know what to make of it.
It's painful. I mean, I'd say anybody who owns stocks today feels like they're caught in like a vortex of downward.
Once when I was there, and I've been gone for a long time, so an interperiod.
Now, there are some similarities. Of course, one is going to be in the 2008 financial crisis. I lived through it. I was in the mortgaging business. Since then, I've been in this business for 20 years. I didn't make it out of it. I lost my ass in that. Everybody pretty much lost as much as you could possibly lose in that whole entire financial crisis if you were in the real estate business. But we made it out. I still kept on going strong. I was out for a little bit, and then I came right back into it. But the question is that, and you hear it all the time, we're in a recession. Recession's looming. Recession is coming. Recession. Well, let's go ahead and see what the whitehouse.gov says what a recession is. What is a recession? Well, some maintain that 2 consecutive quarters of failing real GDP constitutes a recession. That is neither the official definition nor the way economists evaluate the state of the business cycle. Instead, both official determinations of a recession and economists' assessment of the economic activity are based on the holistic look of the data, including the labor market, consumer and business spending, industrial production, and incomes. Based on these data, it is unlikely that the decline in the GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. So what we have to do is we have to go ahead and look at exactly what the first quarter was. Well, first quarter, yes, we have dropped 0.9%. Quarter one was 1.6%. Quarter two, 0.9% decline. So that is 2 consecutive quarters of declining. So okay, that doesn't mean that we're in a recession because you kind of change things around. It doesn't really mean that we're going into a recession because it honestly doesn't really feel, I mean, maybe, I don't know if I'm that disconnected with whatever the real world is or whatever it is. You know, I've done okay for myself. I do live in kind of like a better area. You know, I worked my ass off. I came from food stamps, from nothing, first generation here in the United States. I went to school, got my degree, went and made something of myself. So I hope that I'm not too disconnected with the real world to not know exactly if we're in a recession. I know business is bad right now as far as real estate goes, but we have cycles in that. Cycles in everything, especially when you come into talking about recessions, right? Whenever you're in a free market, recessions happen. It is a historical thing that has happened since the beginning of the free market. It is inevitable for it to go, especially whenever we were dumping a bunch of stimulus inside of the market as far as all of the money that was going into it. So the reason why I also say is, why doesn't it feel like it's in a recession? Well, let's go ahead and take a look at some numbers. Unemployment rate right now is at 3.6%. You know what it was in April of 2020? That was at 23 million people were on unemployment. Obviously, because of this whole pandemic thing. But then you have to take a look and say, hey, what was the unemployment rate back in 2008? Well, the unemployment rate back in 2008 was at 10%, and that's what everybody was fearing. That was really, really, really high. A healthy unemployment rate is between 4 and 6%. Nothing more, nothing less. Anything more than 6%, you're getting into a very unhealthy economy. Then you ask, Omar, what is a GDP? Well, that's a great damn question. You know what, Tater Tot? I'm going to go ahead and let you know. Gross domestic product is the total monetary or market value of all finished goods and services produced within a country's borders in a specific time period. A broad measure of overall domestic products. It functions as a comprehensive scorecard at given country's economic health. What does that mean? So basically, it's all correlated with the stock market, right? The stock market, because the stock market, what is the stock market? The stock market are companies. Companies' valuations are based off of what people are trying to invest in, based on their quarterly earnings. How much does that company bring, and then how much am I willing to go out and invest in said company, whether it is going to be an index company where you're doing multiple companies, or you're going to be doing individual stock, like let's say for instance a Walmart stock, or you're doing a Tesla stock, or whatever it is that everybody is dumping their money into. I'm not into those fad markets, but the real GDP right now, as far as markets go, that's where the market values come. That's what GDP is. That's what the gross domestic product is. That is exactly how much are we stimulating into the economy. So now that all the government has dumped all their money out of it, now we don't have that money coming in. That money is out. People are on their own. You're free to fetch as much as you possibly can based off of your own income. So there's a few things that by definition, okay, a recession is 2 consecutive quarters of negative real inflation adjusted according to the GDP, which is your gross domestic product, which, as we already talked about, is the amount of products sold and produced here in the United States, and how good our economy is. That is directly correlated with the New York Stock Exchange, which is the one that we primarily use. Now, these all affect one another. In 2008, in the financial crisis, it wasn't based about like the whole world went into turmoil, right? But it wasn't the whole turmoil that was selling those really, really terrible mortgage-backed securities, and we were selling those really, really bad loans. And it wasn't that we were selling really, really bad loans. We just had very loose guidelines. Now, those loose guidelines still do exist, but not on the conforming conventional side. Now, is it as bad as it was before? No, because we had stuff that was called paper saver or one-liners or things like that, and those aren't too bad. But a recession by the National Bureau of Economic Research, which is supposed to be a bipartisan thing, and I'm not really too keen on exactly how smart these guys are, because in 2008, so listen to this, in 2008, when the market took a dump back in October, right? For them to go ahead and say we were in a recession, they couldn't conclude that until 2009 in September, October of the following year. So these guys are kind of, they drag their feet. Now, do we think that we're going to go into a recession? Do we think that they're going to go ahead and, we're going to be in a really, really bad position going here forward? Yeah, probably. It doesn't look like it's too good, because we do have 3 more rate hikes that the Fed is going to go ahead and hit us with, okay? Now, what they're doing is they're playing it safe. They're trying to, test the market and trying to see if they're doing a bounce back. They're not looking at it as an inflationary thing. They're looking at it be like, you know what, okay, things might increase in price, everything might be more expensive, but hey, you know what, let's go ahead and try to make everybody happy. I think it's just around election time, and they're just trying to make things, I don't know what the hell they do, especially around election times. I have no idea what they're doing. But the biggest question, since I am a real estate broker, is this a right time for you to go ahead and buy? Is this a right time for you to buy a car? Is this a right time for you to buy a house? Is this a right time for you to make one of those big purchases? The 2 biggest purchases that you make inside of your whole life is going to be A, your car, and B, it's going to be a house. And then your kids. Those little sons of guns, they are expensive as hell. Why doesn't anybody tell you how expensive kids are? Like, give you an actual dollar amount. They're like 2 little Rolls Royce payments running around. Go take them to Montessori school. How much are their clothes? Then your wife wants to throw them a big ass party. Whatever. Okay. So the thing that really, really bothers me is that right now, people ask me, hey, what should I do? Should I make a big purchase? Now, that is a very difficult thing for me to answer, is because we have a few factors. Number 1 is interest rates. Interest rates, yes, the Fed's correlation with mortgage rates does not always correlate together, but it does. That's why the Feds, when they hit us we're at 2.5% on the Fed from 0. Now we went from 2% 5%, down to up to 5.5, low 4s right now on the 30-year fixed, depending on credit. Now the mortgage products that we do price it is based off of 820 credit score, $500,000 property, $400,000 loan. That's 20% down. Investors are actually picking up a bunch of properties. Now this is why I say that, you know, it's kind of a difficult thing to answer, because yes, interest rates are going up and they're going to go up again. Now we're going into the slow season, which is going to be in October, November, December. We're going to kind of see exactly where the market is as far as the urgency that sellers are going to have. If I were you and you were my buddy and we're sitting here across the, you know, if we're at a bar or something like that, we're having a drink and you were telling me like, yo, you know, I want to buy a house, I say hold off. I don't understand why you would. The cost of buying right now is so expensive because you are at the peak. Now home prices have declined. Here in California where I'm at, we're about 10%. Now the problem is that in order for us to know that is this a correction or is this a market crash, which is another big question. Is this a correction or is this a market crash? Now the problem is, and why this is such a difficult question to answer, is because typically whenever you talk about a correction, it's about 10% within a 1 year span. And then if you go to a market crash, it is 20% in a 1 year span. But do we count it from 2019? Or do we count it from 2021? Do we count it from when the whole market lost its damn mind? Because the influx and the high prices and the high, it was not a stable market back then. It was not, nobody even knew what the hell was going on, because everybody was like, you know what, I'm gonna go ahead and work from home. I need a bigger place. And everybody started driving these prices up. Investors started dumping money into it. And the problem is how to answer that is because, well, these investors are buying homes. So is that gonna hinder the total inventory that we're gonna have? It could. Now, investors purchase softened up. Investors do purchase a lot, especially these hedge funds. The first time in history since hedge funds are getting into the real estate game. In January and February, investors purchased and were really, really soft. It wasn't that much, but it was up 31% over the same time in 2021 and 64% over the same time in 2019. While overall sales were down 8% compared to last year, up only 7% compared to 2019. Now this is something that you have to take a look at. Now the reason why they're building up and the reason why they're taking in a lot of this is because they're going to go ahead and purchase, and the one thing that's not going to go down is going to be rental. Rental market is not going to go ahead and go down. In the history, rental prices have gone down a little bit. Now there's whole thing, I hope that landlords go ahead and ease up and kind of, you know, help the little guy. Landlords aren't going to do that. It's not going to happen. It's not even close, because you want to know why? Because all landlords got screwed up the ass for the past 2 years, and now you think that they're going to go ahead and, you know, be generous, be happy with it. Now another thing that the reason why I say don't buy now is because new home sales right now, especially new communities, now you have your KB Homes, your Lennar Homes. Lennar Homes is one of those companies that they did not give commissions to agents during the past 2 years during the pandemic. They said, nope, we're not gonna go, we don't need you. You know who's giving out sick ass commissions now? Like I'm talking about 4%, 5%, 6%, plus bonuses on top of that. Well, it's Lennar Homes, KB Homes, Pulte Homes. All these other homes are all, they're getting a little desperate because they think that they're gonna lose hundreds and hundreds of $1,000s. Now the newly built homes fell more than 8% in June from prior month and 17% lower than in June 2021. Now in here in California, we're about 29.85% actually it's encompassing on the west side of the United States. Inventory also rose 9.3% in the whole entire United States, which it's a little bit more here. But that's going to be your mortgage rate update. I hope you guys enjoyed the video. For up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance, link in the description below. Until next video, guys, I really appreciate you watching. Peace.